Snowflake Snow, Beginner's Guide. Imagine every spreadsheet, every customer record, every sales log, every clickstream a big company has ever collected, and now imagine all of it sitting in one place where any team can query it, share it, and run AI on it. That is what Snowflake does. This is a beginner's guide to the business itself, so we will skip the stock chart and focus on what the company actually sells and why customers keep coming back. Educational only, not investment advice. So, what does Snow actually do? Snowflake sells what it calls a data cloud. Think of it as a giant, rentable warehouse for a company's data that runs on top of the big cloud providers like Amazon Web Services, Microsoft Azure, and Google Cloud. Instead of buying servers, a customer signs up for Snowflake and starts loading their data in. The clever twist is the pricing model. Snowflake uses consumption-based pricing, which just means you pay for what you actually use. If you run a big query, you pay for that query. If your team is on vacation, you barely pay anything. That is different from traditional software, where you sign a flat yearly contract no matter how much you use it. The business is almost entirely one product line. In fiscal year 2026, product revenue, the actual compute and storage usage, came in at $4.47 billion, which is 95% of the company. The other 5%, about $212 million, is professional services, which is just consulting and training to help customers get set up. On top of the core data warehouse, Snowflake has been bolting on new layers. There is Cortex AI and Snowflake Intelligence, which let companies run AI models directly on the data without moving it anywhere. That is the agentic AI piece you may hear about, basically AI assistants that can answer business questions. There is Snowpark, which lets data scientists build machine learning models, machine learning meaning software that learns patterns from data. And there is the marketplace, with 3,678 data listings, a kind of app store where companies can buy or share datasets with each other. Snowflake's main customers are big enterprises, 13,328 of them, including 790 of the Forbes Global 2000, in financial services, technology, retail, and healthcare. So, who does Snow compete with, and how does it win? The number one competitor is a private company called Databricks. They sell something very similar, a platform for storing data and running AI on it, but they come at it from a slightly different angle, leaning more into machine learning workloads from day one. The cloud providers themselves, Amazon, Microsoft, Google, also offer their own data services, which is a strange dynamic because they are simultaneously Snowflake suppliers and competitors. Snowflake rents infrastructure from them, then sells a layer of software on top that competes with their native tools. Snowflake's moat meaning competitive advantage, the thing that keeps rivals from catching up, is officially rated narrow. Here is what it does have. Once a big enterprise loads years of data into Snowflake, that data becomes deeply embedded in their reporting tools, their data pipelines, and their daily workflows. Ripping it out and moving it somewhere else is expensive and risky. This is called switching cost, the friction that keeps customers from leaving. There is also a network effect from the marketplace, where network effect means a product gets more valuable as more people use it. The more companies that share datasets on Snowflake, the more attractive the platform becomes for the next customer. And the bet on Cortex AI is an attempt to widen the moat. If AI runs inside Snowflake rather than outside it, Snowflake captures the intelligence layer, not just the storage layer. The risk, and the reason the moat is called narrow rather than wide, is that AI is shifting where the value lies. The data platform could become a dumb database if AI orchestration happens somewhere else, and that is the central battle for the next few years. What are the key drivers for the business over the past 5 years? Snowflake has grown revenue roughly 5 times over 5 years, from about $592 million to roughly $4.68 billion. Two forces explain most of that. The first is the consumption-based model expanding inside existing customers. Snowflake reports a metric called net revenue retention, or NRR, which sits at 125%. That just means the same group of customers from a year ago is now spending 25% more this year, without Snowflake even needing to sign new logos. As customers load more data and run more queries, the bill grows automatically. The flip side is that this model is harder to forecast quarter by quarter than a traditional subscription, because a customer's bill depends on how much they actually use, and even efficiency improvements can paradoxically lower revenue per workload. The second driver is enterprise deals getting much bigger. The number of customers spending more than $1 million a year went from around 100 to 733, and customers spending more than $10 million a year jumped from about 10 to 56. That is up 56% in the last year alone. In the most recent quarter, Snowflake signed 7 separate 9-figure deals, meaning over $100 million each, including the largest contract in company history at more than $400 million in total contract value. The company also tracks something called remaining performance obligations, or RPO, which is the dollar value of work that customers have already committed to but not yet consumed. That number jumped to $9.8 billion, up 42% in a year, which signals enterprise customers are signing longer, larger commitments. The newest layer is artificial intelligence. AI revenue crossed a $100 million annual run rate, and AI features influenced 50% of the company's bookings in a recent quarter. That is the lever management is leaning on to keep growth in the high 20s or above. To wrap up, so the simple version, Snowflake is the data warehouse and AI platform for big enterprises, charging by the query rather than by the seat, and growing because customers keep loading in more data and signing bigger contracts. If you are watching this company as a learner, the 2 business signals worth following are AI adoption, whether Cortex and Snowflake Intelligence start driving real incremental consumption, and the Databricks competitive dynamic, which will define how much of the AI value layer Snowflake gets to keep. Educational only, not investment advice. This guide is meant to help you understand the business so you can dig deeper on your own.